of the Cattle USA Daily Podcast. Today, we are bringing you guys your market report with Dan Gerhold. A day late. I was actually out of town traveling, so Thursday was the earliest day that we were able to get in as a team and chit-chat on what's going on in the market. So we actually recorded this morning, so very up to date for all of you guys listening today on what is going on in the markets, what we are seeing this week, the trends that we're seeing, things to watch out for as producers in just the world of agriculture this week. So without further ado, let's go ahead and get into this episode with Dan. That is amazing. You weren't joking when you said that you were going to get more.
I know. I'm working on it.
That is so funny. Oh my gosh. You're really just pulling your collection, just making a full closet full of them now.
Yep.
You better be wearing that on the 4th of July.
Well, yeah, that's what it's all about. I mean, America right here is coming up. Celebrate it. Let's go.
So that's either a Red Baldy or a Hereford. Is that an issue for you, or are you like, it needs to be an Angus on there?
It is an issue. I mean, the fact it's a Hereford, and sorry to the few people that might hear this and not like my opinion, but I'm personally not a Hereford fan. But in the spirit of July 4th and cattle in general, we'll take it one for the team.
Taking one for the team, really sacrificing yourself here in order to just rep for the brand.
That's right.
The cattle industry as a whole.
That's right. What's better than American beef?
Not a whole lot.
That's
Not
right.
a whole lot, that's for damn sure. I had a whole week of eating American beef, so I can definitely tell you that nothing's better. So
That's right. I agree.
love it.
How's life?
Love it.
Down south.
It's
you
good.
warm?
It's good. We're warm. We're warm. I have actually been in Colorado all week, so it wasn't bad there. I like the week before we pulled in, they were like it was 100 degrees, and luckily we drove up to Colorado and it was in the like 90s. So better than it was in Kansas. I left Kansas, it was like 107, so won't complain there. I got back last night at midnight, so Kansas is definitely warmer, but we got rain, so
Good.
I'm not gonna complain. I'm not gonna complain too much. I was in Denver with someone from Central Arizona, and she's like, we haven't gotten like any rain in like 3 years. So yeah, so I was like, okay, yep, nope, I'm not gonna complain. Rain is wonderful. Kansas is great.
Yep.
How's Iowa?
Absolutely. Sounds like some good wheat yields coming in, so life is good
Yeah.
in Kansas.
Life is very good in Kansas. How's Iowa? How's life for you?
Same thing. Caught a couple rains this week, and no major wind to speak of. So corn's not flat, looking good, dark green. I mean, this is favorite time of the year. Warms up.
Are we knee high by the 4th of July?
Oh, we're knocking on chest high now. So
Hell yeah.
it sure grew in a hurry with this heat that came on. Cattle are
Yes.
starting to struggle. We were 95, 96 over the weekend, and the wind was high, and it was fine. The cattle didn't do too bad with the wind, but now that wind died down, and it's stuffy, muggy. Supposed to get some rain again, so they're gonna back off feed today pretty hard.
Yep. I totally get that. Do you have a bunch on feed right now?
You know, I've got some at home. I didn't fill
Yep.
completely up. A lot like what I'm hearing on the phones is guys are
Yes.
staying in it, but they're pulling the numbers back.
Yep.
What's that old saying, Lauren? You're going to run out of money before you run out of cattle. And as a whole, I think the industry is at that point when you're talking $2,500, $2,600 for a yearling minimum.
Yeah.
I mean, we're still seeing some $3,000 10 weights out there. So it's
Crazy.
a lot of money getting borrowed on these cattle still today. So yeah, but no, we've got some on feed. It's an okay thing to pull the numbers back to with this heat. So if I
Yeah.
could just train them to not stand in the cattle waters after I clean them, life would be really good.
I think everyone can agree.
Yeah, I don't blame them for doing it either. So just clean them more often. Yeah, no, life is good up here. So yeah, now what's on your mind today?
The markets. What's
What?
going on with them? I want to talk about the markets. What's happening? I have a lot of things on my mind right now actually, because the reason I was in Colorado was for a event in correlation with NCBA and the checkoff. And so we were talking all things cows all week. And so I've got a lot of things on my mind, but specifically right now, the markets. So let's talk the markets.
Man, plain and simple, cattle markets are kind of garbage trash. If we're talking futures and options, they just don't move. Obviously, the producer's going to be frustrated if he's trying to put hedges in place on newly purchased cattle because the deferreds are not giving them the opportunity. And I mean, even looking at August, the positive basis is pretty wide overall. Every now and then you see it where you have to remind the producer that futures market might not necessarily care about that. If it's trading
Mm-hmm.
like garbage and the path of least resistance is lower, you better be looking
Yeah.
at doing something. You know, it's trying to price in something that's kind of coming down the line, not what we have today. Cash is slipping a little bit too. You know, you're talking 230 in the north, probably 225 in the south. I'm hoping we see this week, but overall it sounds like 223 is the bid. It's that time of year, right? You know, we're coming into dog days of summer. They're buying for a short and kill next week with the 4th of July, and there's just not a lot to be wildly bullish about in the cattle market for the time being. Once we get past, next week, see what the kill does. You know, a good thing about this setback, Lauren, is the Packers are making some money again. It's been a little while. Finally got them in the black. Yeah, we want to capitalize on the consumer dollar and get as much as we can, but at the same time, if we don't keep them profitable occasionally, we're going to have some issues long term. So
Exactly.
nice to see them back in the black. The other side of it, not to go back negative, but people are watching box beef climb higher here, and I can tell there's some frustration because cash is slipping and boxes are higher. At the end of the
Mm-hmm.
day, it always comes down to the kill number. That's what matters most to the producer. If we slow these chains down to the point where consumers still want the beef, but the supply is limited because of that slower chain speed, you're going to see boxes climb. If you speed the chain back up, which is what every cattle producer wants, then typically if boxes go higher with a faster chain, now all of a sudden that's a sign of strong demand. But that's not the market we're in. So what I'd like to do is get past the 4th of July here. If we can get these workers back in the plants and have profitable packers, I'd like to see that kill number ramp back up. Long story short, if you're watching the spread between choice and select right now, it's doing funky things. Well, it was extremely narrow there for a while, telling us the consumer might be shifting a bit towards cheaper protein. Hogs are also agreeing with that on the ramp higher that they've taken. But at the end of the day, you look at yesterday's afternoon numbers. Now we see select falling off, choice climb or mostly steady. That's actually partly because of the season we're in. We're starting to kill last year's calf crop, so your yields drop, your grading drops. We're seeing the weights come down a little bit. That's plain and simple. You're killing last year's calf crop. So we just got to get into it. If we get past July 4th, typically the deeper into July you get, you might start seeing some more yearlings getting slaughtered. Some of those calves got made yearlings. At the same time, you're also going to see those calves have a little bit more time on feed. So even those are going to improve. It's just the dog days of summer have that name for a reason, and that's where we're at.
Yeah, it definitely is. And I think we're feeling it just across all sectors, right? Like it's hot outside. It feels like the dog days of summer and everything is following in that. At least, one positive this week, we haven't had any crazy rumor mills absolutely demolish the market for like
Yeah.
12 hours and then bring it back. So, I mean, small wins,
Thanks for
small
pointing
wins.
that out. I didn't even notice. I was just, yeah, going about the day to day and didn't even know. It has been like 7 days since a rumor struck. So
Yeah, it
good
has.
catch there. Yeah. Let's keep it that
You
way.
know, the
Get a
fact that
streak.
we're celebrating about not having any rumors hit the market should be a red flag. But, we're going to take the small wins where we can get them. And this is a win that we can take. And we're going to bask in it.
Is there an industry anywhere in this country that is more prone to black swan slash rumors slash bad news destroying profitability? Is there
No.
any other industry like this?
There literally can't be. Like I genuinely like no. There's not. Unless you're thinking like the tech industry and it gets rumored that like a major hack happened or something like that's the only thing I can think of. But like
They come
at
right
the
after.
magnitude that we do. And also, I think the thing with the cattle industry is in other industries, because the cattle industry is smaller, to our own demise. some podunk little publishing house from the middle of nowhere that I'm not going to mention can say one thing and it hit the news and everyone believe it for that period of time until it gets retracted and corrected. Whereas other industries, I feel like people go in with a little bit more hesitation. Like if a smaller publishing house publishes a rumor or something, they're not going to immediately believe it. They're going to be like, we're going to wait until like the Wall Street Journal confirms this or something like that and then start reacting. So,
I
yeah.
agree. Yeah, it's a very quick to react type industry.
Yes.
Cash normally moves slower than futures, but obviously, these traders, they can move positions pretty quick to get in and out of, shorts, longs, whichever way, however they're positioned. And unfortunately, normally those rumors are negative towards the industry. So, we don't want to see it wreck our good markets right now, but it's hard to overall when I look at the consumer as a whole. We're starting to see a shift towards pork and chicken because it is a touch cheaper than beef. Can't argue it. We knew eventually we would see that. But overall, I think the consumers are eating more protein as a whole than they were 2, 3, 5 years ago. So
Mm-hmm.
I also don't expect boxes to fall out of bed. I don't think consumers are going to completely shy away from it. It's just that time of year we've got to manage the risk to get through the next 2 months. Once we get
Mm-hmm.
past Labor Day, especially, then we can start looking towards, Christmas. Are we going to have, good demand for those Christmas ribeyes, that prime rib? What's that going to be like? What's supply going to be like? I'm still optimistic we're going to have a shorter supply this fall, but inevitably, if they don't speed up that chain speed, that could hurt us longer term. So,
Mm-hmm.
like I said, it's good to see the Packers make some money. It's that time of year, so let's let
Yes.
them enjoy it. They're not getting rich by any means, but it's not efficient to run these plants at a slower kill. But
Mm-hmm.
nonetheless, they are finally profitable. I'm of the opinion that when they see black ink, eventually that leads to them ramping chain speed up because they want to make as much as fast as they can.
Yeah.
But we got to get past the 4th of July. It's just timing here.
Mm-hmm. Yeah, and that's something we talked a lot about this last week too, was Packers and chain speeds and everything that goes along with that. And it's you as like an average consumer or producer, you're like, well, why are they slowing down chain speed? Like if they can kill every 7 seconds, like why are they killing every 11 seconds right now or something like that? And that is purely because they still need to make full shifts. Like they still have to make full shifts, still have to stretch things out a little bit. And it's playing that balance right now between consumer demand and producer supply right now is a headache and a half, and I don't envy ag economists or buyer, like anyone that has to deal with any of that right now, because it's a disaster. Our feedlots are at seeing lowest numbers that we've seen in a long time. We're feeding cattle for longer. It's weird out there. That's what I
It
got to
is.
say. It's weird.
It is. Yeah. Yeah, it's not to shift gears a little bit, but it's also that time of the year where you're going to see the retailers start to adjust their prices. Historically speaking, April, May, June, they don't really care about their margin on beef because they just want to get people in the door. They put the beef case in the back of the store so that everybody has to walk by all the other junk food because they know they're
Yes.
going to go to that beef counter. They're going to buy beef no matter what. So they don't care really how much they make on it. But once they start seeing that product slow down in the dog days of summer, it's very, very common for them to start marching their prices higher to improve those margins.
Mm-hmm.
Once again, bad timing. If we are dipping into the consumer's pocketbook more and more now with these higher prices, if they start raising their margins, then their prices, hey, I'm a little bit concerned. Where's the top end on this thing? I mean,
Yep.
$7 burger. Can we handle $8 or $9 burger? Can we
Mm-hmm.
handle 35, $40 steaks? I don't know.
Yeah.
It's all concerning, but like I say, it's the dog days of summer, so I'm not in the camp that it's over for good, but it could see a lull here.
Yeah, for sure. Any other highs, lows, any other things that we need to chat about today?
Speaking to technicals, if I look at, just the live cattle trading on the chart, it's how do we How do we manage this risk using the board, even though it's not giving us a great opportunity? Well, there's some short positions getting put on people we work with right now, just from the standpoint August has an island top in place. I don't
Mm-hmm.
like seeing that type of formation. Combine that with the market, I think we peaked out at 220.05 in the August contract. Now we're trading down to 208.90. So we're $10 lower. Open interest has dropped in that period, but in the last 5 days, we've seen it mostly flat. It's a little bit of a mixed bag of emotions. What are traders doing? The funds are not, they're very used to the dog days of summer. So are they getting out? Are small specs buying in because of this wide positive basis? So we've got to make some really tough decisions here right now. Technically speaking, if I took the fundamentals out of the cattle market and just traded these charts, I'd probably be on the sell side for a couple dollars here.
Mm-hmm.
From then, it's all about the calendar, what the consumer does, what the packers do with that kill number. You got to bring it back to the fundamentals. But for a couple bucks here, it doesn't look great. Feeder cattle, it's kind of odd, but they're a little bit different. They have also sold up way off their highs at 314.20 in the August. Our low on Tuesday was right down at 300 even. If we close above this 40-day moving average, I think we have an opportunity to rally this thing back maybe $5-6. It seems like cash feeders in the barn softened a touch, but not overall, not in a big way. So it's hard for me to picture that index completely falling apart. As a general rule of thumb, I like to believe that you don't see feeder cattle really soften hard until the feed yards start losing money. So
Mm-hmm.
right now, fat cattle getting sold are making $500 to $900 a head. Some of these calves were bought really, really cheap early last fall, and now that those are getting killed at 230 plus, there's some big profits there. Guys are not afraid to go to the barn and spend what they're spending if, unless they were overly hedged. But as a whole, I think feeder cattle might see a bounce here for a little bit. I think I would use that bounce to get layer in some protection, especially that September October timeframe. If you've been in this industry for any length of time, that September October timeframe, typically you see cash feeders soften. You got farmers in the field, you have supplies going up as yearlings come off grass, and then some guys are weaning calves early. So it's just high supply, a touch lower demand. So if we get that push to 305, maybe 310 in the SEPOC, I would use that, put some coverage on, get your butt covered for that time frame when the cash feeders typically soften.
Just touching on other markets, how's box, how are kills, how's the kill cow market, how's just anything else that we need to touch on in any other markets?
Cows and bulls for the win, I guess. It's hard to think this thing's going to zero and cows and bulls are
Yeah.
still selling on their highs. So overall, like I said, we've seen a consumer shift to burger. There's not enough cows going to slaughter. It's normal this time of year to see those slaughter numbers down. At the same time, the
Mm-hmm.
dairy industry, they don't want to kill a bunch of cows right now because they don't have the heifers to back them up. So until we see more cows come to the market, I think that market's going to be just fine. That might stay resilient here through July, August, as long as consumers still need that hamburger. Getting away from cattle, talking grains, I think everybody's in depression mode, and we're starting to see that capitulation from the long positions thrown in the towel. It's not uncommon for us to get very close to putting a bottom in a market when we get that capitulation. So I don't know if we made the bottom. It's nice to see some green on the screen today in the grain markets, but overall, it's been a bloody nightmare. There's a lot of producers that are 75, 80 cents underwater compared to their break evens on the corn crop. Where beans are trading, they're 50 cents under. Shoot, those guys got to be a buck underwater. So a lot of pain going on there. At the same time, if you haven't bought any of your feed needs, it's a great time to get started. Buy low, sell high. I think a lot of the industry knows this crop insurance settlement date is coming this fall. If
Mm-hmm.
we had a counter seasonal sell off this spring, never got a chance to hedge up these producers at profitable levels. Now you're looking at, is there going to be a massive amount of crop insurance claims just based on price alone? Well, it's not uncommon to see that corn market rally into that day. So I'm not going to be surprised if we punch corn back to $4.50 at some point. I'm going to be pretty aggressive if the crop looks good. Selling in that 445 to 455 range. It's just a matter of right now, the path of least resistance is lower in the grain market. So it's hard to get wild and crazy, but I think we should look at really getting some feed needs booked here at $4.
Yeah, definitely. Well, Dan, thank you as always for your time today, for breaking everything in the markets down for us and chit-chatting about what's going on in the world, and for bringing the best fashion sense to the podcast of any guest. So much appreciated in every aspect there. Yes,
that's right.
For sure. Well, to all of you listeners out there, make sure you check out the show notes and check out our Cattle USA insurance link, where you can see all of those LRP rates and get in contact with the team to get yourself covered, get yourself protected as we go into the dog days of summer and everything that holds. And as always, thank you so much for listening to another episode. We'll see you all next time on another podcast. Have a good one, y'all.